Hey, this is Tim Herriage. I hope you're liking the new format. If you haven't caught up with it yet, about 2 weeks ago, I started releasing daily podcasts where I answer other people's questions. So if you're listening to this and you have any real estate investing questions, hop over to ihavelunchmoney.com, submit your question, and I'll do my best to read it out. So if you're liking the new format, subscribe, give me a review, and share it with your friends. All right, here you go.
Welcome to the Real Investing Show with Tim Herriage. Each day, we'll provide real investing for everyday investors. Tim is a nationally recognized real estate investing expert, podcast host, and public speaker. He built his businesses from the ground up and is here to help you do the same. Here is your host, Tim Herriage.
Welcome back to the Real Investing Show. I am Tim Herriage. Thank you for stopping back by. Today, Huey writes, what is your thought about the real estate market from now to year end? And in all caps, your own thoughts based on the data you have researched. So the fact that you put all caps on your own thoughts tells me that you don't want me to regurgitate some other article's opinion or just simply reshare something, which is, I'm going to go down a rabbit hole here. It's the biggest danger right now in the real estate market is all the negativity out there. Percentages are going to be really misleading right now. I mean, you're going to see these headlines that say days on the market up 50%. And it's like, oh my God. And you feel like the sky is falling. But if days on the market are historically 90 in Dallas Fort Worth and they go from 5 to 8, that's a 50% increase. It still means nothing. A lot of people are talking about the price reductions right now when, there are a lot of price reductions. But from the data that I see, many of them still are above the median home price or the median dollar per square foot from 12 months ago. And so what people don't understand is real estate's very seasonal. And typically we really kind of peak out in, I would say, April, May-ish. In regards to new listings weekly, and then it starts going down. So right now, nationally, when you look at new listings, we are well below, we're below 2021, we're below 2020, and we're almost below 2019. So we're literally trending farther below, and that's like the comparable month in the year, right? You have to look seasonally at real estate. And that's new listings. So let's look at pending sales. Where are we on pending sales? Pending sales are below 2021. They're below 2020, and they're almost to 2019 levels, and very much in line with previous years. Homes sold. You go to homes sold. Now, this is interesting. There have been less homes sold in this last 30-day period than any other year in the last 4 years. So there's less homes that have sold in 2022 than in 2020, 2021, or 2019, right? So when you go for and I like to look at the Redfin data. They've got if you just go to redfin.com/news/data-center/, you can look at it. And I'm just looking at the 4-week numbers. I mean, you can go 12 weeks and it's still the same data, right? I mean, we're really in line with other years. But then you click on new listing median price. And here's the funny thing, right? The new listing median price in the last 12 weeks, ending as of last week, is right at $398,000. It is $400,000. This time last year, the new listing price was $348,000. So nationally, the median new listing price is $50,000 above what it was last year. It's $90,000 above what it was in 2020, and it's a whopping $120,000 above what it was in 2019. So year over year, we're still seeing new listings going on the market at approximately 14% more than last year. So what does that do? It means right now the median sales price in the United States is $389,000. That's up 12% from last year. So you tell me how we're having a crash or a correction or a cooling when the median sales price this month, right now, is still 12% higher than last year. And last year, by the way, was 20% higher than the year before that. And that year was 4% higher. And the year before was 4% higher. So we're still 3 times kind of the pre-pandemic norms. Days to close. Let's look at that. Everybody says, oh, it's taking longer to sell. Right now, it is taking 26.9 days to close on a transaction. According to the data, I'm pulling live right now as I do this. If it's taking 26.9 days to close a transaction, that's got to be worse than last year. No, last year it was 28 days. So right now, the facts, the numbers, the data, it is taking 1.5 days less in the last 12 weeks to sell a home than the previous than the previous year in that same time period. Let's look at new listing median price per square foot, because remember, home values are going down. That's what everybody wants to say. Here we are, median list price per square foot, 14.63% up over last year. We're at $211 a foot now, whereas last year we were at $185 a foot. So it's just amazing to me. But so surely active listings, right? If you listen to the media, active listings have just got to be out of control, right? Wrong. Just now, this week, we crossed over last year. There are 754,000 active listings versus 745,000 the year before. So we're up 1.29% year over year. That doesn't sound bad to me. Now, here's the interesting thing. Then you say, okay, well, last year was kind of crazy. What about 2020? Well, guess what? If there's 750,000 on the market right now, in 2020, there was basically 1 million. Well, what about 2019? 2019, that was a really good real estate market. Well, there were 1.2 million then. So basically what I'm telling you is there's 500,000 less houses on the market right now, this time of this year, than there was 2019. 2 years ago, there was 250,000 more homes. Last year, there was 10,000 less. So yes, it's up over last year, but last year was a ridiculously stupid year, in my opinion. Median days on the market. Guess what, folks? Again, median days on the market right now, 18 days. Last year, 18.7. 2020, 40 days. 2019, 39 days. So we're still half of what it was the year before the pandemic. Price drops. Now, this is an interesting one. Price drops are way up this year. Way up. I mean, just double, guys. It's double. Yeah. It went from 3% to 6%. So only 6% of listings are actually having their prices dropped. That's just not a lot. It's just not a lot. And then you get to age of inventory. You would imagine that the age of inventory has got to be skyrocketing and more houses than any year before, or they're on there longer. Well, wrong. You got 31 right now. Last year, it was 32 and a half. The year before that, 59 and a half. And the year before that, 55 and a half. So, again, it's one of those things, percentage-wise, year over year, oh my gosh, it's a lot more. But like, you got to look, percentages are really going to be very, 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 very misleading. Now, month supply. You hear that there's so much on the market that, the month supply has got to be way out of hand. Well, here we are, 9.2 weeks of supply. Not a lot, folks. It's barely over 2 months. Last year, 7.7 weeks, month and a half, right? So you could hear it was a 30% increase year over year. Oh my gosh. But really and truly, it's still at 9.2 weeks. In 2020, it was 12.5 weeks. In 2019, the last time we were really as close to healthy as possible, it was 14. So, you know what? That number will go up another 50%. 50%. Oh my gosh. But it would still be below half of normal. So, and pending sales, I'm almost out of time. Median sale price per square foot. You just got to look at that. I mean, look, it's $208 a foot right now. Last week. And this time last year, it was 883. So we're still up 13.78% in median home price per square foot in all the Redfin metros as of right this second. So that was the longest one of these real investings I've done. And I just need to say the answer to your question is I think I feel like we've peaked on interest rates. I feel like that peaked in June 23rd, the week of June 23rd. I feel like the economy can't take much more shock. We've already lost, 20 some odd % in the stock market values. And I feel like the worst is over. I feel like if you have an opportunity right now to buy something at or below the median home price at a little bit of a discount to get ready to fix and flip it, I think you should. I think mortgage rates come back down. I think by September, the Federal Reserve realizes they're measuring against old numbers, not new numbers, and rates start coming down. So that's my take. Wade, thank you for writing in. If you like this episode, please do me a favor. Go subscribe, give me a rating or a review, and just so you know, if you have any questions, hop over to IHaveLunchMoney.com. Submit your questions. I can't wait to hear from you. Thanks for your time. We'll see you tomorrow.
Thank you for hanging out with us today on Real Investing. If you have questions, comments, or feedback, please visit IHaveLunchMoney.com. Tim can't wait to hear from you. We're always grateful for your reviews. And if you enjoyed this episode, please subscribe and share it with your friends. Remember, the business is the vehicle, not the dream. See you next time. The preceding program is provided for general education purposes only and does not constitute legal, tax, financial, investment, or other professional advice. No information contained in this program should be construed as financial, investment, or legal advice from any individual, author, host, or guest. You should always consult a financial advisor before investing.